the right stock at the right time.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. Wishing you all a very, very happy and prosperous 2019. We hope to be aiding you in that path to prosperity all through the calendar year. I'm Neeraj Shah, you're watching Indian Open. Let's start off with the headlines for the new year. The Securities and Exchange Board of India makes physical settlement of stock derivatives mandatory, but the shift will happen in a phased manner. The Reserve Bank of India expects bad loans in the system to fall by March, but warns against high MSME loan growth in its financial stability report. AMFI will release the list of large, mid and small cap stocks based on the 6-month average market cap. Funds reshuffling could happen soon. And auto sales in December are likely to be slower than usual. Medium and heavy commercial vehicles may bear the maximum brunt, according to a Bloomberg Quint poll. Well, let's take a look at the trade setup for the day. The world markets are shut today. We won't have too much of trading save for our markets and maybe a handful of 2 or rather 3 markets which will be trading, but none which would have a significant bearing on what we do today. Expect thin volumes as well. But just a recap, yesterday wasn't a particularly bad day for the markets that were trading, but as a year, the S&P 500, the mother market, the US markets had its worst ending since 2008, and that speaks volumes of how bad a year 2018 has been. I would presume a large portion of what the S&P 500 has done happened in the month of December. Just that the last 3 or 4 trading sessions for the US markets weren't as bad. For our markets, well, in dollar terms, we have corrected about 6 or 7%, but in rupee terms, I think we ended the year about 3.1, 3.2% higher. So it wasn't as bad. I mean, if you go back in history, there have been years which have been worse as well, noticeably about 2014 or thereabouts. So we're not dating back our performance in a number of years, just 2 or 3 years back. But yeah, in dollar terms, our returns weren't the prettiest. The currency weakness also aided to that. So in that sense, yes, the foreign investor would have been disappointed. But I think everybody's hoping for a better 2019. The start today, and well, we would probably have a start which is marginally in the green or thereabouts, but expect very muted trade. Don't expect too much of volumes as well that could be happening. Now, just take a quick check at the trade setup for the day today. Technical parlance, and I was scanning up 2 or 3 reports that came out post-market hours yesterday talking about how trade is looking like. We are near about the levels from which a breakout either direction could happen as well. There is a lack of follow-up buying that was seen in trade yesterday, which is why the Nifty just consolidated after starting off higher. But we are just trading slightly below the breakout point of 10,920, and should over the next 2 or 3 sessions we manage to scale that and move up higher, then traders, and you already heard them on Bloomberg Quint number of times now, then traders are betting on levels of maybe 11,000, 11,100 coming sooner rather than later. So do watch out for those levels. Of course, if you break down, then those levels are nowhere in the question. But 10,920, 10,940, that's the channel that most trading experts believe we should cross over for us to go above the 11,000 mark and trade higher. But very difficult to presume if that will happen in today's session or not. Anyways, we're not in the business of predicting, so I'll refrain from doing that. But today, expect a bit of a quiet session to trade. Volumes, in all probability, would be a bit thin. That won't take away the fact that there will be some stocks that could be reacting in the session today, ranging from PSU banks to infrastructure companies to auto companies. Auto sales, as our headline stated, and as we'll discuss a bit later on the show as well, could well have a muted month of December, and the release on maybe the commercial vehicle names would likely show some pressure there. So Maruti, Tata Motors, M&M, all of them, two-wheelers in focus too. But watch out for the likes of Ashok Leyland and the others. They might be under a little bit of pressure in the session today. So auto sales likely to remain in focus. That aside, the banks and infrastructure companies would be in focus too. So UCO Bank, they've gotten about 3,000 crores, 3,076 crores to be precise, via preferential allotment. Similarly, for the other two as well, Central didn't have a very large number, but Bank of Maharashtra, they've gotten about 4,500 crores as part of the recap plan. So let's see if these stocks tend to react a bit in today's session. Now, remember, UCO Bank, while it didn't do too much in trade yesterday, United Bank, but it did rally about 9% when they got the recapitalization. So watch out for UCO and Bank of Maharashtra in the session today. And I dare say watch out for JMC projects. They've gotten 2 orders, but cumulatively about 596 crores worth of orders in the state of Odisha. The stock was up about 6% in trade yesterday, but this is reasonably sized orders coming in for JMC. Might just see this stock reacting in the session today. Again, very difficult to predict on a day like this, but I would presume that the reaction should be positive to JMC projects as well. So 3 or 4 names that could be in focus, and then of course we'll get you some analysis over the course of the next few days about the mutual fund reclassification and what would it mean for some of the companies once those lists come out as well. However, let's tell you what's lined up on First Word today. It's the collection of the top editorial stories that we believe we should bring to you. Darshan takes us through the second part of the Bloomberg Quint Market Poll, and it's all about stocks and sectors today. SEBI's new circular on the derivatives segment makes physical settlement mandatory. Sajid comes in to explain the implications. Yatin then takes us through the auto sales in December and what's expected to pan out. And the Tata Group's reliance on TCS has only edged higher. Somit Johnson to tell us why. The first day of 2019, and investors will surely be hoping that this year pans out to be better than the last one. Yesterday, we got you what the experts had to say about the Nifty and the factors at play. But which sectors will take it higher? And what about individual stocks? Darshan's here with the second part of the Bloomberg Quint Market Poll conducted amongst 27 market experts. Darshan, what are they betting on?
Yeah, so basically a couple of sectors which I also found surprising. Companies, sectors like capital goods is something that, that was something that people like at this point of time. So the number one among the maximum people said that they prefer private banks at this point of time. IT remains the preferred bet for 2019. I was very surprised to see capital goods this time around because for the past few years, no doubt the third quarter saw a turnaround, second quarter saw a turnaround that came in, but nevertheless capital goods features among that. FMCG consumer is an evergreen sector, and surprisingly after the big dropping that we've seen, I was also surprised to see oil and gas as part of the preferred sectors that analysts the market experts believe could be one of the sectors that they are watching out for this time around. In terms of sectors that probably need to be avoided in 2019, commodities again, a lot of them had both oil and IT saying that they like it, but oil again features among the sectors which the maximum of the analysts also said that they don't like. Metals cyclical, auto hasn't done well. You've seen the selling off that's happened in frontline companies like Maruti as well as Tata Motors. That doesn't play the thing, and IT as a pack also doesn't feature among them. Now, which are the stocks that people like, and let's talk about the financial space. So we asked them, all the experts, to name the top 3 stocks that they prefer and could be the outperformers for 2019. Surprisingly or unsurprisingly, ICICI Bank and Axis Bank, both of them have been outperformers as far as this financial year is concerned, with the concerns now ceding, and they actually take pole position. Kotak Mahindra Bank, again, one of the high quality retail bank that is there, that finds focus. Bajaj Finance, the Bajaj twins obviously find focus. Canfin Homes has corrected significantly, but that finds a mention, and RBL Bank finds a mention this time around. So among the financials, yes, these are the stocks that they like. The other stocks that feature among the buy list include Larsen & Toubro. That's something that they like. Surprisingly, JSW Energy finds a mention. Piramal has corrected significantly, but they believe that there is value creation that could come in. Petronet LNG, because of the terminals that will be Kochi terminal that will come out, that was something that they like. Siemens is on a turnaround case, and that's something that they like. And Gujarat Gas, I'm surprised finds mention here. That's one of the stocks that's being mentioned. Before we end, some few other stocks that they like, counters like an ITC, Titan, obviously evergreen stocks, Dabur, HCL Tech and Bharti Airtel make the list of other stocks that are being preferred for 2019.
Well, maybe Happy New Year for all of these. I'm not surprised at the mention of maybe an HCL, Darshan, but Airtel, the street is divided. And the interesting bit was that a lot of people find IT to be a preferred sector, and equal number of people believe that IT should be shunned as well.
So IT was there, and I think one more sector was there. I think oil sector was there, which I think finds a mention in both that people like and they don't like.
Okay, great. Well, let's see how it turns out. Darshan, thanks so much for joining in today, and Happy New Year to you.
Same to you.
All right. Now, it may not be a happy new year for some market participants because the market regulator has issued a new framework for the stock derivatives segment that makes physical settlement mandatory. According to a SEBI circular, stock futures and options, which are currently being cash settled, will move to physical settlement in a phased manner. Confused? Well, Sajid Mangar is hereby to demystify this. Sajid, good morning and Happy New Year.
Happy New Year.
Now, this came out, well, not quite unexpected, but on the 31st December evening for this to come out. Just explain this to us now.
So, in April, that's when SEBI said that it's going to move towards physical settlement, and it said, okay, initially we will have a parameter of illiquid stocks which are in F&O, which will go into physical settlement, and in a phased manner, they will put physical settlement across F&O going forward. What SEBI yesterday did was an extension of what it has said. Now, what happens is that what SEBI is saying that from April onwards, the least last 50 stocks with the least market cap within the F&O category will go into physical settlement, and there's a transition which is going to happen over 9 months. So for the first 50 will go on April, the second 50 will go on July, and then in October. We already have 46 stocks already in physical settlement there. So over a period by October, you will see the entire F&O market going into physical settlement, and that's what the roadmap is all about. It has a couple of issues going forward, because the thing is that when you put 46 stocks into physical settlement, you saw the volumes going off, because end of the day you are looking at rollovers, or someone will have to supply the stocks, or someone will have to take a delivery of the stocks at the time of expiry, and people were reluctant to do so, especially because STT was steep. There was initially a confusion of what kind of STT would be applicable, and then you had the IT tax department coming in and clarifying that that the STT applicable for physical settlement will be similar to delivery-based STT, which is delivery-based STT is very high, and if you add that to the transaction cost for a F&O trader, it almost wipes out his profits. So people are not taking delivery based contracts, and even if they are doing it, they were squaring it up or rolling it over to the next month, so that they don't have to take delivery there, and that led to eventual volumes coming down in these stocks. If you look at the daily settlement, it's around 240 to 360 crores is the daily settlement which is happening in the F&O space today. So that's one challenge which is there, and exchanges are fearing that that's going to happen with many of the stocks. That means volumes may dry up. The volatility which was there may come down significantly, which is ultimately the aim of the regulator. But it will also lead to lower volumes in the cash market as well, because end of the day you have the base price coming in from cash market. So if the volumes in F&O come down, cash market volumes which are used as hedge or trading positions, they may also come off. That's what the apprehension is of some of the market players. The second thing which traders are pointing out is that even though we are moving away from cash settlement, the cash settlement is available in Singapore. So the foreign investors who are interested in cash settlement, and many of them do have cash settlement there, they will move to Singapore, because Singapore started 50 stock futures last year. Though the volumes are very minimal there, now it is a boost for them. So there may be a migration of volumes happening from India to Singapore again, and that this time in stock futures, because stock futures are readily available there. And the third thing is about this entire thing hinges on the SLB mechanism, which is Securities Lending and Borrowing Mechanism. We've seen that the regulator has been from time to time enhancing or bringing in more measures so that the mechanism is more robust, but it hasn't picked up yet. You need to have a vibrant institutional mechanism to lend securities. We haven't seen that happening. We need good insurance companies stepping in, mutual funds stepping in and saying, okay, we are going to lend you the stocks for the rollover happening. But with high STT, people are not willing to do that, because even there an STT will come in and increase the cost of the transaction. So SLB is also not picking up that way. So what happens is that ultimately people will say that I don't want delivery based transaction, which basically means the volumes will come down eventually, unless you have a robust SLB or you bring down the transaction cost to a very small level, and that is a big challenge for the market, because we have set up the mechanism, but our transaction costs and everything which now gets added up is not going in favor of moving towards a physical settlement.
Okay, so some challenges, but the regulator has announced its intent and it will go ahead with it. So let's see the market impact on this one.
Yes.
Sajid, thanks for putting this into perspective. Maybe volumes go down a bit, both on the future side, and if that were to happen, maybe on the cash side as well. So this is something that you need to monitor. The release came out post-market hours in trade yesterday. A lot of releases which will come out during market hours today. It's the first day, which is in the auto space. It's the first day of the month, which means automakers are going to come out with the monthly sales numbers today. And while December is typically a weak month, it's expected to be specially muted this time around. Yatin Motors put together a poll of 3 brokerages which came out with their estimates. Yatin, how is it going to pan out? And of course, wishing you Happy New Year.
Happy New Year, Neeraj. And when you come to the auto side, clearly there has been a slowdown, especially starting with the festive season, and that will continue. But we have brokerages which are hopeful that January onwards we could have some relief coming in for automakers. But talking about the month of December, clearly at this point in time, it's visible that the passenger vehicle segment would be almost flat in terms of growth on a year-on-year basis, and we could see a double-digit decline coming in for the commercial vehicles. The only silver lining for the entire auto sector is that there will be growth as far as the entire two-wheeler space is concerned. Let's talk about market leader Maruti and how really will sales shape up there. So we'll have almost 3% kind of a growth coming in for Maruti Suzuki. Sales are seen at close to 3.4 lakh units. And if you look at the two-wheeler space, as I was mentioning earlier, we have Hero MotoCorp, wherein the growth will be almost flat on a year-on-year basis. We are expecting sales to be close to 4.8 lakh units. If you look at other companies like Bajaj Auto, of course, the domestic market as well as the export market both will look higher. So we are expecting a 23% growth coming in on a year-on-year basis. And clearly, they will be able to gain market share if they are able to deliver such high numbers in terms of growth. And TVS Motors, again, we are expecting a 13% kind of a growth coming in on a year-on-year basis. As far as Mahindra & Mahindra and Royal Enfield sales are concerned, again there we are expecting some growth coming in, 13% growth for the Mahindra & Mahindra automotive segment, and this is largely dominated with the light commercial vehicles. Of course, the utility vehicles segment will see a flat growth despite the fact that we have the new Marazzo launch coming up. As far as Eicher Motor is concerned, again a 6% kind of a growth is what we are looking at. As far as Royal Enfield is concerned, 71,000 units. Of course, there are some disruptions at the Chennai plant, but they are just recouping from that, and production is gradually, getting ramped up. As far as that thing is concerned, 13% growth again for TVS Motors on the back of strong export growth. And as far as the commercial vehicle players are concerned, we'll have Ashok Leyland as well as Tata Motors again coming in. Ashok Leyland, we are expecting a 14% kind of a decline coming in. Total sales seen at close to 16,500 versus the run rate of 19,000 units that they usually posted. So on an overall basis, expect a weak number for the entire auto sector, ex the two-wheeler space.
Ex the two-wheeler space, and more so for the commercial vehicle space as well. I think thanks for putting that into perspective. Remember, Friday we brought you the Bloomberg Quint Dealers poll. Today this is a mix of what 3 brokerage houses have said on specific numbers, and which is why the numbers will be very, very important today. Commercial vehicles especially will come off quite rapidly. Do watch out for these. I think thanks for putting that into perspective. The last piece on First Word today, the Tata Group saw its listed universe add a little more than 82,000 crores in its market cap in 2018. While this rise by itself may or may not be startling, what might concern Group Chairman N. Chandrasekaran will be its reliance on TCS. The IT major had little company from some of the larger conglomerate companies like Tata Motors and Tata Steel. So Amit Sarkar has done the math to tell us just how much TCS saved the Tata Group, the blues, in 2018. So Amit, good morning, Happy New Year. Not that this is unknown, but this year it was very stark.
Well, good morning and a Happy New Year. So if you see, this is the first time that the Tata Group companies are closing the year with a market capitalization of more than 10 lakh crores. But very few companies have aided the Tata Group to achieve this milestone. So in 2018, only 8 out of the 28 listed Tata Group companies have managed to gain, which is the lowest at least since 2011. Now, out of these 8 companies, one is TCS, and if you remove the gains in market value of TCS, then the other 27 companies have seen a fall in their combined market value. Now, TCS market cap increased by nearly 1,94,000 crore rupees in 2018, but the market capitalization of the other 28 listed companies declined by nearly 1,12,000 crore rupees in 2018. Now, this disparity in the market value of TCS and other 27 listed Tata Group entities has increased to such an extent that now TCS market capitalization is more than 2 times the combined market capitalization of all the other Tata Group companies, and this is for the first time at least since 2004 that we are seeing this kind of an event. Now, this shows you the kind of dependence that Tata Group now has on TCS. Now, in 2018, if you see, TCS market capitalization was close to 7,11,000 crore rupees, while that of the other 27 listed Tata Group companies was only close to 3,35,000 crore rupees. Now, among the top gainers for Tata Group, we have TCS, which saw an increase in its market capitalization of around 1,94,000 crore rupees, followed by Titan, which managed to increase its market capitalization by only 5,700 crore rupees. And then comes Indian Hotels, whose market cap increased by close to 2,800 crore rupees. And on the loser side, Tata Motors, which saw a massive drop of around 83,000 crore rupees in its market capitalization, followed by Tata Steel and Tata Global Beverages.
So what are the factors that influenced the major names in this group?
So for TCS, it was a higher growth rate, rising share of digital business, margin expansion, and 6 different corporate actions that to reward shareholders aided the rally in the share prices. Now, company's revenue grew at a higher rate compared to its nearest peer, that is Infosys. This, coupled with rupee depreciation, aided the company's EBIT margins in 2018. Now, the revenue growth was partially aided by rising share of digital segment to the overall revenue mix in 2018. Lastly, the corporate actions. In 2018, if you see, TCS announced 4 dividends worth 44 rupees per share, a buyback and a bonus issue, all to reward shareholders, and this also supported the rally in the share prices of TCS in 2018. Now, for Titan, if you see, the start of 2018 was not that good for the company because of volatile gold prices and because of a possible import duty hike, but it picked up pace as import duty was not hiked. Jewelry sales volume and watch sales volume picked up in the second quarter of financial year 2019, and more importantly, the management commentary regarding the Q3 outlook was very positive that the company gave post the second quarter earnings. Now, for Indian Hotels, it was favorable demand supply dynamics, pricing power, and operating leverage that aided the rally in the share prices of Indian Hotels. Now, demand for Indian Hotels hotel rooms increased by nearly 4 to 6% as against a supply of around 3%. Now, this gave the company the pricing power, which boosted its operating margins in 2018. Now, on the loser side, if you see, Tata Motors, headwinds faced by JLR, which resulted in double ratings downgrade in 2018, worked against the company. Sales volume of JLR slowed down and in fact declined in the first and the second quarter of financial year 2019. The company also reported 2 consecutive years of losses, which prompted S&P to cut its rating twice in 2018. Now, post the Q2, the company did give a turnaround plan for JLR, but another rating agency, that is Fitch, said that this turnaround plan won't be enough to lift the rating pressure that the company has seen. Now, for Tata Steel, despite a rights issue which increased the number of shares, the company's market capitalization fell in 2018. Now, what led to this? A double whammy of falling steel prices and rising raw material prices, coupled with trade wars, marred investor confidence. Along with that, an expected delay in completion of its joint venture between the Tata Steel Europe and Thyssen Group, and higher debt to acquire Bhushan Steel also worked against the company in 2018. Lastly, Tata Global Beverages. Now, poor tea and coffee plantation in 2018 and a weak domestic and international tea business weighed on the company in 2018. Lower crops in the plantation business resulted into higher tea prices in 2018. This, coupled with competition, weighed on the domestic tea business of the company, while the international tea business was impacted due to declining black tea market and an extended summer in the international market, which impacted the international tea business of the company.
Wow. The major business is at least in a clutch of small ones which haven't been quite included, physically not possible. But Amit, thanks for putting that into perspective. TCS yet again at the rescue. That brings us to the end of First Word today, but lots more lined up on the show. We discuss the risks that are threatening to push automakers off the track with Ankit Merchant of SMC Institutional Equities, frankly the most pertinent discussion today. And then take a look at the asset quality picture for City Union Bank with Managing Director and Kamakodi. This was one of the best performing stocks on the NSE 500. So an important conversation. But after this break, a full tilt towards the day's trade. Stay tuned to Bloomberg Min Live.
What will be my contribution to the world? I wonder. Will the things I created
pass the test of time?
or maybe they'll lay the foundation for something new? I hope my ideas survive.
I've had some great ones.
And there's still
So much left to do.
who knows what life will bring.
The road is long.
The journey full of promise.
The pursuit
Only just beginning. A series of exceptional stories about exceptional people whom time won't forget. Pursuits by Skoda. Coming soon on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're watching Indian Open. Let's take a look at the derivative space to try and figure out how the trade setup might shape up today. Agam Vakil is standing by with the FNO setup. Agam, good morning. Happy New Year to you. How is the trade setup looking like?
Happy New Year to you as well, Neeraj. Well, the volumes were thin yesterday. We didn't have too much participation from retail or, for that matter, institutions, which explains the kind of numbers that we're seeing in the derivative segment. So when it comes to the Nifty futures, of course, early days in the January series, hence we're seeing a little bit of an accumulation in OI, 4% added in the Nifty, and some addition in the Nifty Bank futures too, where we saw an addition of around 8% in OI. But surprisingly, despite the fact that the indices remained range bound, we actually did see the VIX climb by as much as 5% to around the mark of 16. So this perhaps could be a crucial one as we move into a whole host of events in the month of January. But coming down to your open interest distribution, currently that, stays with, your max OI stays with the 10,500 on the lower end, which denotes perhaps a lower end of where you expect the Nifty to move. And of course, on the higher end, it is toggling between the 11,000 and the 11,200 call. Let's talk about your open interest change. And again, no surprises here, considering we have seen more writing coming through around the 11,200, 11,300 mark. But let's talk about your stocks, and Adani Power remains in the FNO ban. And among others, we have the put call ratio, which remains largely unchanged for the Nifty. The Nifty Bank put call ratio at around 1.03. And again, coming down to your stocks, you have the likes of Chennai Petro, which advanced in trade, fresh longs there, and Container Corp, which stand out for me. These are the two stocks that stood out, considering we saw longs coming through. In terms of unwinding, again, it was essentially NIT Technologies, which saw some amount of longs unwinding, but short covering for TVS Motor Company and Jet Airways. So these are the other two stocks that you can watch out for as we move into trade today. But on the whole, Neeraj, there's consolidation coming through, largely quiet day of trade, and that is possibly what we're going to expect today as well.
Yeah, well, and maybe lower participation as well. We'll figure that out on countdown when Agam and Darshan join in and talk about that as well. But Agam, thanks for putting this into perspective. That's the FNO setup. Maybe individual stocks, 2 or 3 could be active in the session today. But let's talk about the fundamentals, because a lot of stocks in news which might react today, and a lot of news flow expected during the day as well, even though it's the first day of the new year. T.S. Harihar, founder and CEO at HRBV Client Solutions, joins us on the show. Hari, good morning. Thanks so much for joining in. You slept early, I slept early. So hopefully it'll be a great new year as well in terms of sleep. But what about specific pockets of strength and weakness, Hari? 2019, better year for stock picking. Would you go out and invest some fresh monies in the first 1 month in the hope and the expectation that you will make money during the course of the year?
Neeraj, I would believe yes. I think compared to 2018, which was an extremely volatile year, if you start off from the LTCG tax in February, then I think through the liquidity crisis of NBFC, I think it was a very, very volatile year. A lot of corporate governance issues. Hopefully, I think all that is behind. There has been some good news, especially if you look at the NPA front. I think the RBI FSR report has very clearly said that the NPA is at least showing signs of kind of bottoming out. So that's kind of good news. There was also bad news on the core sector front, because I think 3.5% is probably the lowest we saw in the last 16 months. So that is not a very good news. But I think broadly, the biggest takeaway for me from 2018 was that in a year when, let's say, the US lost 16%, Germany lost 13%, India was up actually 4%. So I think that is probably the good news, in the sense that there are pockets of strength like consumer goods, probably private banking, NBFCs, where there seems to be a lot of hope in the coming year.
Interesting. When you say hope, would you believe that there will be lower chances of a fall off, or do you believe that there will be substantial wealth creation in these pockets?
See, I expect wealth creation as far as the consumer space is concerned, because I think last year was a good year for most of the consumer stocks. If we take a Hindustan Lever or a Britannia or a Nestle, I think they would have given about 40-50% return easily. So I think it was a good year last year. I think this year is going to continue, because what's going to happen between now and probably the end of the year, we're going to see a lot of spending happening by the government on the rural side, on the semi-urban side, and all that is going to translate into a lot of demand. With oil being low as it is, most of the consumer goods are likely to get a benefit in terms of lower input costs. So I think consumer to me looks to be in a very, very sweet spot. Private banks, we like the space, but I think there are valuation concerns. NBFCs, I think it could be select NBFCs which don't have a maturity mismatch, where we could see a very good performance in the coming year.
Okay, interesting. We were just doing this analysis yesterday about how some of the consumer financing NBFCs, Bajaj Finance in particular, has done reasonably well all through the years.
Yep.
This is the 7th straight year, I presume, when Bajaj Finance has given positive returns. And even in the aftermath of the IL&FS crisis, it's turned out the best performing Nifty stock.
Sure.
Would you buy those, or would you buy the ones wherein there has been a correction? Again, the valuation correction is kind of a mystery or a myopic view, right? Because the earnings growth might taper off for some, even though the prices have come off. So how do you separate the wheat and the chaff?
See, we still believe that the consumer finance companies are going to be the best bet. And if you talk consumer finance, then it probably boils down to Bajaj Finance. To a lesser extent, I would say M&M, but I think largely it boils down to Bajaj Finance, which is the largest in the consumer finance play. There are stocks like, Dewan Housing, Repco, which we are looking at, but that's a slightly risky bet. And I'm saying that as a caveat. Bajaj Finance to me looks like a kind of a mug's game at this point of time. But I think if you look at a Dewan Housing or a Repco, we are still not too sure how the liquidity crisis is going to be addressed, how the maturity mismatch will be addressed. At least they are in the right direction. So if you want to take a little bit of risk, I would believe Dewan Housing and Repco could be good choices. But if you want a safe bet, I would believe Bajaj Finance would probably be the safest bet in this year.
Okay. The auto sales numbers will start trickling in, Hari. Now, my question to you is, what should a participant do if the stocks correct a little bit on slightly adverse monthly sales numbers of December? Where do you expect the numbers to be adverse? Where do you expect there to be stock reactions? And where do you expect people to buy in at lower levels if you believe they are worth buying?
There is broadly, I think, on the what I would call the customer-facing space, which is the two-wheelers, the four-wheelers, I think the pressure is going to continue. And whatever feeds that we are getting from the channel checks is that there could be a 12 to 15% drop as far as auto sales are concerned, especially the consumer auto sales. In fact, a lot of these auto companies have been trying desperately to push year-end inventories via discounts, but I think that's not been working too well. So I think stocks like Maruti, TVS, Hero Honda, they could be under obvious pressure. Where we could actually see a positive performance is companies like Mahindra & Mahindra, which are a very strong tractor franchise. And I think within the entire auto space, I would believe tractors followed by heavy commercial vehicles could be the big beneficiaries. I think consumer-facing auto is where we could see a lot of pressure.
The brokerage poll that we did, 3 brokerages that we assessed the number of, seem to suggest that non-two-wheelers, others will be under pressure, and consumer vehicles could actually have a number which is substantially lower. Ashok Leyland, for example, I think the poll suggested a 14% drop.
Yes.
So what happens there?
Again, as I said, our preference would be for tractors, because I think that is one space to me that looks to be largely de-risked. We could see companies like Tata Motors doing well on the HCV side, but I think Tata Motors, as we know, has got larger problems. It's not about India, it's more about the Chinese demand. So I think they have got a larger problem. But if you look at the domestic play, I think stocks like Maruti is where I'm most worried about, because number one, valuation is a problem. Number two, I think the sales momentum of last year seems to have been lost. The momentum we had till about July, August, I think that momentum seems to have been lost as far as stocks like Maruti is concerned.
You track Leyland at all, though?
We do, but we have always been a little wary of that particular stock. So we don't really have a coverage on Leyland, nor do we recommend Leyland. Our coverage is more restricted to Tata Motors, Maruti and the two-wheeler stocks.
Okay, so Maruti is something that Hari is a bit worried about, primarily because of the valuations being high and the sales momentum not looking as strong. So according to him, this is that one name to watch out for in the session today. Maybe M&M could be the one that could be a lot more stable. However, so if autos, and we've already discussed autos and some of the other NBFCs, but a lot of stocks in news, and let's get into our research team and in our research huddle to try and figure out the ones that would be in focus today because of news, maybe some brokerage notes as well. Amit, Nikki, as well as Yash join in to talk about that. Good morning, all three of you. Happy New Year to all of you. And let's start with the stocks in news first.
Okay. I'm going to start off with Lupin, where the company has received an FDA approval for clobazam oral suspension, which is used as an adjunctive treatment for seizures. HCC, that's another company. We saw a 20% uptake on the stock yesterday. The group CFO ceases to be the CFO with effect December 31st. HDFC, which has revised the retail prime lending rate by as much as 10 basis points, and Allahabad Bank, which has again revised MCLR by 10 basis points across various tenors. Capital infusion, we have 3 more updates coming in from 3 different PSUs. UCO Bank has received around 3,076 crore. We have Bank of Maharashtra, which has received more than 4,400 crore, and Central Bank, which has received a sum of around 1,680 crore from Government of India.
Okay, and maybe a couple of these could react, because we have seen, for example, United Bank react after it got that infusion. Though most people said it is anticipated, the stock was up about 9% the next day. So let's wait and watch whether these react or not. Thanks for that, Nikki. Amit, what about brokerages?
Well, a couple of them. First one is on the asset management companies, where HDFC Securities believes that the total penetration level is that the mutual fund industry is largely under-penetrated, because the penetration level is just 11%, and they're expecting the financialization of savings to grow at a compounded annual growth rate of around 9.7% over FY18 to FY20, which in turn will benefit the asset management companies. Now, one of the concerns that impacted the AMC industry in 2018 was a change in total expense ratio, to which the brokerage says that the impact of this will be clear over the next 1 to 2 quarters, and they're expecting asset management companies to pass through 75 to 85% of this impact to distributors. Now, for HDFC AMC, the brokerage does not have any recommendations or ratings, but it says that the business will not need any capital going forward, to grow. It is expecting the company's asset under management, revenue and net profit to grow at a CAGR of around 18%, 6.7% and 17.4% over FY18 to FY21. Lastly, it says that it sees that the one-year forward fair value for HDFC AMC is close to 1,708 rupees per share, as against the current market price of 1,510 rupees. For Reliance Nippon, they have initiated a buy rating with a target price of 227, which suggests a potential upside of more than 40%. Now, the brokerage says that they appreciate Reliance Nippon's focus on building granular and stickier retail assets, which will drive the growth for the company going forward. Now, they're expecting the company's AUM, net profit and revenue to grow at a CAGR of 19%, 9.5% and 1.2% over FY18 to FY21. The second we have is on JK Cement, where MK has upgraded the rating to buy from accumulate and has hiked the target price marginally to 864 from 846. Now, according to the brokerage, the grey cement capacity expansion would drive the volume growth and the next leg expansion for the company. However, the brokerage prefers JK Cement over the other cement companies due to its exposure to white cement, as this segment is more sustainable than grey cement in terms of profitability.
Okay, we'll watch out for these, and in fact Deepak Jasani joins in a bit later on, so we'll talk to him about these AMC companies and what's the rationale thereof. And actually, Amit has explained the rationale as well. But what happens going ahead and what's the base thesis? Arnam, very interesting. The stock has been under a bit of pressure, but they are very bullish on this one. So let's wait and watch. Okay, and then speaking of AMCs and mutual funds, Yash, there could be some buying and some selling based on releases from the regulator at some point of time.
Right, Neeraj. So, in order to ensure uniformity in the mutual fund schemes, SEBI, the mutual fund body AMFI had come out with guidelines specifying the market cap for large cap, mid cap, and small cap companies. So, with its 6-month revised list coming out very soon, the first 100 companies in terms of their 6-month average market capitalization would be considered as large cap companies, followed by the 101 to 250 companies being the mid cap and the rest being small cap companies. In terms of the key changes to watch out for, the large cap companies may include the likes of Berger Paints, DV's Lab, Page Industries, United Breweries being some of the names that could make their entry. What may go out from the list of the large cap stocks and into the mid cap may include the likes of Aditya Birla Capital, BHEL, Shriram Transport, Sun TV and TVS Motors. On the other hand, names which may move from the small cap category and into the mid cap category may include the likes of Aarti Industries, Alembic Pharma, Bata, Gujarat Fluorochemicals, Mahindra CIE, Relaxo Footwear, among others. And the stocks which may move out from the mid-cap space and into the small-cap category, they would include the likes of Arvind, Avanti Feeds, Dilip Buildcon, GSK Consumer, Indiabulls Ventures, and others.
Well, this is a list compiled by East India Securities, but it'll be very interesting to see what mutual fund schemes hold these stocks as well. And maybe some selling could come in into those, or some buying could resultantly come in as well. Thanks so much, all of you, for giving us those stocks and news and the ones to monitor today. Hari, if I can take a leaf out of that and talk about the PSU banks which are getting some capital, are you enthused by this?
See, we like PSU banks, but I think we have to be a little more stock specific, because I think pure infusion of capital alone is not a great positive. I think what really matters is how they manage the NPS, how they manage the credit growth. And I think if you want to really look at PSU banks, I would probably suggest restrict yourself to the top 2 or 3 banks, probably an SBI, a BOB. I wouldn't really go much beyond that, because I think stock selection will be very, very critical. You need banks that have the capacity to grow and also have a kind of a control of the NPS. So probably 1 or 2 PSU banks, yes, we would be betting on them for this year, but not PSU banks as a sector.
Not PSU banks as a sector, but only the large ones. So there's money coming into these banks, they're getting that additional capital. Stricter monitoring norms might help them get out of the PCA. You don't believe there is a tactical play here?
Not much. See, because what's happening today is a lot of these PCA banks were actually barred from lending to other borrowers, but they were permitted to lend to the MSME sector. Now, what has happened is in the last 1 year, the MSME loans have gone up by about 160%. Now, that's becoming another headache for the RBI. So I think what's happening is while you've stopped lending at one place, you're building up NPS in probably some other place. So I think the problem of PCA banks, I would believe, is much larger. So, there are a lot of banks I know we can bet on as coming out of PCA, but I would be a little little cautious because PCA banks are banks which have a real structural problem. So I would still prefer to go by probably a Canara Bank or a BOB or a SBI, which has the kind of a base and which probably can control the NPS going ahead.
Okay. So Hari is not too enthused by these capital infusions. He doesn't believe that there is merit in trying and owning these names at the current point of time. Okay, we'll talk more too with Harihar about specific pockets that he likes and he dislikes as well. But good time to get in our technical experts on board as well. It's the first day of the new year. Important to chart out the course for today and for the near term, maybe even the long term. Amit Harchekar, Director at Index Genius Investment Advisors, joins us on the show, as does Brijesh Singh, Senior Technical Analyst at StockAxis. Gentlemen, both of you, good morning and thank you so much for joining in. Amit, Happy New Year to you and your team. How are you approaching trade today? What's the thesis like for the near term? I don't think we can really talk about the year at large, but maybe we can talk about the current expiry as well, or the current series as well, excuse me.
New Year. Yeah, New Year to all. Good thing about this market is now the open interest build-up has again started it has crossed the level of 2.2 crore marks. Right now at the beginning of the series we are at around 2.3 crore mark. So overall, if you see the structural move in this market, now we think a lot of negative news is already been priced in this market, and right now market is trading at the edge of breakout. If you see the structure of Nifty, it has formed a symmetrical triangle, and we can easily expect a rally towards 11,200 in the near term. So the current series VWAP for Nifty future is at around 10,818. This is the area where maximum long position is built into. So we would suggest staying long for the current series. The stop loss would be at around 10,800, and we are expecting target of around 11,200. Overall, if you try to see this market from a very short-term perspective, if you combine the index of HDFC Bank and Reliance, these three stocks holds around 32% weightage in the index, and these are turning as a lead indicator for the market. So we believe if we try to analyze index of even these three stocks, it tells you that we are into a process of a symmetrical triangle, and there is a high possibility that the breakout is likely to happen on the upside. The upside potential is ranges in the between 7 to 8%. So we are quite positive on the market because these are the three stocks which could take it further higher.
Okay, well, watch out for these individually as we'll talk about some specific stocks too. But Brijesh, to you, and Happy New Year to you and your team as well. What's your approach to trade this morning?
Good morning, Neeraj, and wish you all the viewers of the Bloomberg Quint and all the members of the Bloomberg Quint happy and a prosperous new year from my organization. See, if I consider the Nifty for a very short-term time frame, so it's been trading in the range of 10,640 or say 10,700 on downside, followed by 10,950 or say 10,980 on the higher side. So the first part is that it's a very good part since all the negative news has been discounted and nothing massive has happened, and as a global meltdown was been happening. So we have not broken the previous swing low of that was of 10,339 if I'm not mistaken. Now coming to on the higher sides, till Nifty not able to cross that 10,950, 10,970 band, I am not looking Nifty going and touching a level of 11,100 or say 11,150 on the higher side. But even on the downside also 10,640 would be acting as a support. So right now I'm a little bit neutral. But the only concern for the intraday point of view, if I talk about, then if Nifty breaks 10,800, then one can go for a sell side with the stop loss of 10,840 and look for the target of 10,700 or even 10,720 on a downside.
Okay. So in light of this, Brijesh, let's start off with you first. What are the stock specific recommendations that you're making today?
See, yesterday we have seen a small buying coming up in the metal counter. So in that, Jindal Steel and Power looks good from the chart. A trend line breakout has been witnesses the previous swing high has been broken. So somewhere around 164 or 164 and a half, the stock got closed. So if any dip somewhere around 161 to 163, one can use this thing as an accumulation purpose with the stop loss of 153 and play for the target of 180 or 183. The time frame to hold this counter would be a 1 week or even 7 working days has been considered, we can consider. Second counter would be on container crops. The stock was been trading in the range of 680 on the higher side, followed by 650 on a downside. Yesterday we have seen this range breaking and the volume has been increased, and even the delivery volume has been increased, so which indicates the momentum on a buy side. So one can look out to buy this counter somewhere around 683 to 685 with a stop loss of 665 for the target of 720. The time frame to hold this counter would be, say, another 2 to 3 trading session. Anything above 720 stock can even jump to the level of 745 to 750 zone.
Okay, so watch out for these names. Amit, what about you? Your stock-specific recommendations?
Well, I have 2 buy calls. One would be buying HDFC Bank. We believe HDFC Bank is now game changer for the market because it has given a breakout from a symmetrical triangle, and the amplitude of this pattern is around 8 to 10%. So we can easily expect stock to move towards 2350, 2400 in 1 to 2 months time frame. In the short term, we are expecting this breakout to at least stretch the stock towards 20 to 35. The stop loss for your long trade would be at 2095. Second buy would be buying ACC futures. Again, this stock has gone through a very good consolidation. In fact, it has formed a rounding bottom, and we are now seeing stock approaching the breakout levels. Here the stop loss would be at around 1470. We are expecting even ACC to move towards 1600. So we are expecting financial and commodities, both sector, to drive Nifty higher.
Okay, so do watch out for these specific names as well in the session today. Just wondering, two names in the financial space which have had a fabulous move in the calendar year 2018. Amit, I want to come to you with one, and Brijesh to you with the other. On the large cap space, and Amit, you're preferring the large caps, so I'll come to you. Bajaj Finance, fabulous moves all through the year, as ending the year on a high as well. Is there a short-term trade here?
Well, the direction seems to be quite up, though the stock is trying to form a rising wedge type pattern. But if you see the Nifty Financial Index, that is poised for a breakout and rally of around 8 to 10%. So if that index has to rally, even Bajaj Finance has to participate into it. The short-term resistance was placed between 2600 to 2610. They were cleared up quite comfortably with a very good volumes. Now the next range we are looking at would be around 2800. So right now there is a very good trade coming in even in Bajaj Finance. Now stop loss for your long trade would be at around 2570, and one should be positioned for a target of at least 2800.
Brijesh, City Union Bank, again a stock that's had a fairly decent 2018. What does the near term hold in store?
See, on a daily chart, the stock is in the process of making a saucer pattern, which is again a bullish sign. Somewhere around 195, the stock got closed. So if someone wants to play for a very short-term time frame, then I'll say that keep a stop loss of 182. Present rate can be used for a buying purpose and look for the target of 210 to 215 zone. But if someone has a view of say 6 month plus horizon, then definitely your support lies a little bit deeper, somewhere around 155 to 160 zone. And chances are that the stock would try to touch 255 to 260 zone.
Wow, okay, even that's possible, but I must say the stock has gone up quite a bit. To remember, an interaction with the management of City Union Bank coming up a bit later on in the show as well. It's been one of the better performing financial names, so worthwhile talking to them on the first day of the new year as to how the year ahead looks like. And Kamakodi will be joining in at about 9:45. However, it's 8:50, that time of the show, wherein we get you our special segment Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, what's the stock on your radar today?
Morning, Neeraj. The stock we are tracking is Quest Corp, and a bullish call coming in on the back of a bullish engulfing pattern forming on the charts. Let's first try and understand what it means. Basically, the bullish engulfing pattern is the formation of a bullish candle right after a bearish candle, wherein the body of the second candle completely engulfs the one ahead of it. The larger the size of the second body, the greater are the odds of a rally. No additional confirmation needed. Now, coming back to the chart of Quest Corp, what we saw in yesterday's day of trade is that it made a big up move of almost 3.5% yesterday, on the back of which we are seeing that big green candle. Now, the stock has been in a consolidation phase. We saw a 13-day losing streak in the month of November, but since then it has gone up from those levels of around 600, and it is currently trading at about 660. In the near term, there could be a bounce coming in as far as the signal goes.
And how well has the signal worked for Quess Corp in the past?
So Neeraj, 7 out of the last 10 times that the indicator has turned positive on an average, one could look at gains of almost 5% over the next 10 trading sessions.
That's interesting. Okay, let's wait and watch. Thanks a lot for that, Yash. I must say, Quess Corp has started a bit of this pull back of sorts because it hasn't had a particularly great 12 months. Just that the last few sessions, it's just had a semblance of sanity here. Now, compare Quess Corp with its, well, arguably the only peer or the nearest peer, which is TeamLease, and it's a chalk and cheese performance between the two counters in 2018. Quess Corp, as we showed, has actually gone down. TeamLease over the year, well, the last 7 days is okay, but TeamLease over the year has actually had a 20% uptake. So both on the valuation front as well as on the business front, there's certainly dichotomy between the two companies. Hari, a nascent space of sorts, but building up in a manner of speaking as a sector. There are 3 companies now in this pocket and probably more in the offing as well. But between the two, TeamLease and Quess Corp, do you have a preference?
Clearly, it's TeamLease.
Even now?
Yeah, I agree that relatively probably the valuations are better. But then, considering the kind of management pedigree they have with Sabharwal at the helm, TeamLease is a company that has actually delivered time and again. And here is a person with a 30-year background in the industry, understands finance, understands outsourcing. There is a certain pedigree associated with the stock. And if you look at the kind of client base that TeamLease has, and I must admit, I don't track Quess too closely, so I wouldn't know much about it. But, we always prefer TeamLease in this outsourcing space, largely because of the traction they've been able to show on the earnings as well as on the revenue per employee.
Interesting. Whatever little you track of TeamLease, are you comfortable putting in fresh money to work in TeamLease now?
Yes, I think the only thing we would suggest is probably wait for small minor corrections rather than just jumping into it, because the stock has been a very strong performer. I think it got listed about a couple of years back, and from that point, I think it's been a very, very strong performer. So instead of just jumping in, probably use every dip to buy. But long term, I think the space as well as the particular company looks to be very sound.
Yeah, I remember a Motilal Oswal note which had done a deep dive into the businesses and had spoken about how the margin profile for these companies over a period of 5 years can actually multiply tremendously, and that alone could lead to significant earnings growth for companies like TeamLease. They were bullish on, I think, both, but I know that they were bullish on TeamLease for sure. Okay, yesterday a few stocks that went up. The entire PSU basket did really well. The dredging corps, the MTNLs, ITDCs of the world, all of them went up without exception, Hari. Flash in the pan moves?
I think there's an expectation of a big dividend from all these stocks, because obviously the government is going to fall woefully short of the divestment target. So the only option they have is twofold: either they go for a buyback or they go for a special dividend. And so whatever companies are having profits on their books, I think the market is betting that there could be a special dividend from most of them. So I would believe it's more of an expectation of dividend that took the stocks up yesterday.
Okay, some news here, and I would want both technical and fundamental views out here. This has just come about. ATF prices for January have been cut by 14.4%. Pan India. I don't think this is a small cut. In fact, if I'm not wrong, this 14.4% month-on-month price cut is the highest since November 2008. Now, this is a big booster, I would reckon, for the aviation companies. You don't need me to tell this to you. You don't need any of our experts to say this to you. But this is a big booster. The question is, what could the stocks do? What can the stocks do on the back of this? Now, fundamentally first, Hari, I would presume that the normal reaction on a normal day would be that the stocks would move up. The question mark is, based on the recent movements, based on the valuations, based on everything surrounding, what do you expect this 14.4% cut to do to the 3 listed players?
First let me talk about the cut per se, and I think it was long coming, because over the last 3 months the price of crude has fallen from $86 to about $55 a barrel, and ATF prices were almost, I think, at par. So I think that was definitely not an acceptable scenario. So the 14% cut, I would believe, is more on par rather than a very high cut, considering the fall in the price of oil. As far as the companies that could benefit, we have always been positive on Jet Airways at lower levels, because we believe that once the capital infusion comes in, hopefully from the from its partner in the Middle East, we believe that the cash flow problems for Jet should get resolved. And once that gets resolved, I think they should be able to concentrate a lot more on business. And once the 14% cut in ATF comes, the biggest problem Jet has always had is their negative CASK to RASK spread. So I think that should get rectified. We have concerns on Indigo largely because of the engine problems they've had, recent spate of service issues that they've had, as well as the valuations of Indigo. So we like Jet Airways, and I think Jet should probably one stock, considering the current price, to benefit substantially from this ATF price cut.
Amit, based on the trade patterns, and I don't quite remember whether Jet is in the ban or otherwise, but which one would you believe could move up? I would presume that all three would move up marginally at that, or maybe more. But what's your best bet?
Well, I would prefer Jet. For one reason, we think the stock is into a corrective up move, and even if we assume it's a bear market up move, the ABC correction should take this stock towards 350 to 360 levels. So even at current levels, it becomes a very good buy. Now, if you are a short-term trader, the stop loss for your trade would be at around 255. Unless that is broken, we presume that the rally should continue in this counter.
Okay, stop of 255 though. That's slightly deeper, about what 7 or 8% the kind of stop loss that Amit is placing. Brijesh, you want to come in? Aviation stocks, if you would trade any?
See, I would be going with the Indigo. The chart pattern which I am looking, the higher lows formation is giving a bullish sign, and from the recent swing low of 956, slowly the counter has been moving up. Somewhere around 1165, the stock got closed. Now if we talk about the support on the downside, the support lies at 1050-55 band, followed by 1120. Whereas on the higher side, the resistance lies around 1200 to 1205 zone. But I'm looking stock touching at least 1270 zone. Even if we check about the we draw a Fibonacci retracement, the stock got corrected from 1522 odd level to 1682. So if we draw a Fibonacci retracement, the 61.8% retracement value comes at around 1200 zone. So I'm looking stock touching at least 1200 mark. And if anyhow, if we are able to cross, then the chances are that in a couple of months, the stock might try to touch 1270 zone also.
Okay, stay on, gentlemen. We will start off on a well, let's see how we start off. Let me not guess too much, but we'll let's see what the pre-open rates throw up for the first trading day of the current calendar. Of course, aviation will be firmly in focus. Auto sales will be firmly in focus. Right now, all over the place, the Nifty and the Sensex, very dichotomous moves between the two, but we'll probably have a start which is maybe sedate. We are one of those very, very few markets that are operating today, but let's wait and watch what comes out of these. Can I start off with the aviation names? Don't quite know if they are already reacting. I'm guessing they should be, but the trade volumes could be marginal at that. The news has just come out. Maybe the market will take some time to digest it as well. But Interglobe Aviation, well, already showing signs of some bit of an uptick. Jet Airways, about a couple of percentage points, no, 1.25%. SpiceJet, is that one reacting? Let's see, about 1.5%. Nothing dramatic, but let's wait and watch. It's the biggest cut since November 2008, as our data suggested. Let's see what's moving on the Nifty 50. JSW Steel, the Bajaj Trio, no, Bajaj Finserv and Bajaj Auto certainly. Maybe not Bajaj Finance, but Bajaj Finserv and Bajaj Finance certainly doing well. Bharti Airtel has been doing well in the last few days. 316, actually, it's been all over the place. It does well one day, then comes off the next day. But in today's session, looks like it might have a good start, at least the pre-open rates, if the pre-open rates are to be believed. IOC, about 0.75% in the red. That looks like it'll be the top loser. But these rates on low volumes could change any time. For now, they are looking what they are looking. Let's look at the mid-cap end of the market as well. Interestingly, Indigo has a 5.5% downtick. Okay, let's just wait for all these rates to settle down before we talk more about them. The banks, and bring up UCO Bank and bring up Central Bank of India. Both of these should be reacting positively, I reckon. 3% higher for Central Bank of India. UCO Bank looks like it'll start off about 5.5% higher, so good start to the two of them. HCC, which had a big spike in trade yesterday, another 20% up move in the session today. It's something that we'll talk to TS Harihar about. Maybe he tracks it, maybe he's got an opinion, but that stock has done very well in the last couple of days, so good going in today's session as well. SAIL, which has had an interesting last 2-3 sessions, and maybe ties in with the argument of the dividend bit coming in, but up another 2% in the session today. The entire PSU basket is active. What is also active is Whirlpool, but that may change. Let's wait and watch. And watch out for JMC projects. If I can pull that one up, it's got a reasonably large order win. Let's see if that is reacting. Another 5.5% seemingly. These days, a lot of these non-liquid mid-cap names also have trades in the pre-open session happening. So active right now. The currency 69.72 in the session today. So some more strength. Yesterday closed at about 69.77. Sorry, 69.65 now. So 11 paise in the green for the currency. Not a bad start for the rupee vis-a-vis the dollar. Bring up the bond yields as well, and let's see if they are moving 7.39. You know, one anticipated the bond yields to cool off after that initial scare of farm loan waivers and more handouts and therefore fiscal slippages, etc. That isn't quite happening though. 7.39, it's rock steady there. I think the belief yesterday that TS Harihar had put out was that, the Harihar of First Rand Bank had put out, was that the range would be between 7.3 to 7.4. We're right now nudging the upper end of the range and not too much of cooling off. Okay, what about stocks that have moved around? Now that we have the benefit of looking at some price movements, the Psu Banks, and if you believe there is a trade here, Brijesh, UCO Bank, Central Bank of India, maybe an Allahabad Bank, what do you think? Could these stocks move?
I would be, rather than going on a Indian bank that looks good on a chart. Right now the stock got close somewhere around 243. So if someone wants to play for a short term bet, then 233 and 238 are the two important support levels. Whereas on the higher side, I'm looking stock touching at least 255, 256 zone, and any closing above 255, stock can even try to touch 262, 263 zone.
Okay, Amit, any thoughts here on any of the PSU banks?
I would prefer Canara Bank because the structure is quite encouraging. It has been continuously forming higher lows, and since it has closed about 269, the next hurdle straightway comes in the zone of 288 to 290. So keeping a stop loss of 268, I would go long for a target of 288.
Okay, HCC is cooling off a little bit, but still up about 12 or 13% trader-friendly stock, Hari. Typically, a lot of people would get into it as well. The corporate development today, yesterday, of course. But what are the thoughts on HCC?
That's typically been the structure of HCC. It suddenly moves about 40% in a couple of days, and then the stock is totally forgotten, and gradually it drifts down. So I really wouldn't read much into it. There was some enthusiasm about 1 week back after that the bridge in the Brahmaputra was opened, which is actually done by HCC, and there have also been talks about them being able to sell their property close to Pune. But I think what I'm really worried about HCC is the quantum of debt, and I don't think there seems to be any resolution as far as the debt is concerned. So probably I think more because of the overhang of debt we would be cautious, and when a stock like HCC moves up 40% in 2 days, I think it's definitely a reason to be cautious. So I don't see any fundamental reason to go and buy the stock at these levels.
The CFO Praveen Sood has ceased to be the CFO as well from December 31st. So that's a voice that used to speak about HCC quite often out of the company too. That notwithstanding, promoter Arya Capital Management sold about 1.45 crore shares at about 11.87 as well. So a bunch of news flows surrounding Hindustan Construction Company, but the stock the last couple of days has done rather well for itself. 10% higher as the pre-open rates look like settling down. What's not doing well? Let's talk about those as well. Century Ply doesn't have the best of moves. Actually, not too much, nothing too dramatic, but down about 1.5%. So that one is okay. Barmer Lorry doesn't look like it's starting off very well. Delta Corp looks like it's starting off slightly weak, but well, nothing too dramatic. On the Nifty 50, no big losers, no big gainers. Expect to be a kind of a dull day. Nothing too dramatic in the offing. Actually, Hari, just a thought on the telcos, Bharti Airtel and Idea Cellular. Is there value because they offer services which none of us can do without? Or is the leverage balance sheet such a big concern that you'd rather buy other businesses?
See, as far as Bharti is concerned, I would believe that once they're able to monetize their Africa business, which appears to be quite close by, I think they would have a financial muscle that will be able to match up to Jio. Where we are worried about a little more is that combination of Vodafone and Idea, because I think that is, I think it reported a loss about 4,600 crores in the last quarter, and we believe that the whole year loss is going to be much higher. Now we are worried that the kind of debt that they have in the books is almost becoming unmanageable. So I don't know what direction that stock takes, but we are very, very negative as far as Vodafone is concerned. Bharti, I think we would still be buying at these levels.
Okay. Well, one more guest in the fray, Deepak Jasani, Head of Retail Research at HDFC Securities, joins us on the show as well. Deepak, thanks so much for taking the time out, and to you and your team, a very happy new year. We'll get to the market outlook in a bit, Deepak. Since we were talking about specific pockets of strength and weakness, and I want to talk about your note as well, but let's just start off with whether you believe telcos offer any kind of value at the current levels, if you have coverage on both or one of the two.
Yeah, good morning and wish you, your team and viewers a very happy new year. About telecom companies, we have been very cautious about the outlook. People have been expecting the competitive intensity to reduce between the new player and the existing two players, but that has not happened so far. Once that happens, then probably the leverage of per second or per minute revenue is too great to ignore. Now, when will that happen? Whether it will happen is a question which nobody has an answer so far. Plus, the business is capex intensive, spectrum fees, license fees, etc. are too humongous, and technology changes require a lot of capex to be continuously spent. So, having regard to all this, I think for the time being, telecom companies are trading plays. Whenever they are sold out due to one or two players getting out or due to a negative regulatory development, you can get in. And once the stock bounces up by between, say, 7 to 12%, you can exit, take your exit. I think that is the strategy that one can adopt till there is clarity on the reduction in the competitive intensity.
Yeah, that doesn't seem to be happening anytime soon. So I think there's consensus building out here, at least on the fundamental side, for the telcos. If at all, maybe Bharti, Vodafone Idea seems to be a no-no across quarters, to be honest. Maybe trading plays is what Deepak Jasani is saying. T.S. Harihar believes that if at all, you need to trade into Bharti and not into Vodafone Idea. Okay, just 5 minutes left for the markets to kickstart trade. Quickly, let's tell our viewers all that you need to know to stay ahead in trade today. First up, SEBI in a circular has said stock derivatives that are currently settled in cash will move to physical settlement. The move will be carried out in phases by the market capitalization over April, July and October expiries of 2019. Bloomberg Quint poll, the next piece of course, Bloomberg Quint poll of 3 brokerages indicates a muted December for automotive volumes. Brokerages remain sanguine on volumes recovery in the new year. Regulatory cheer for Lupin as the company receives US FDA approval for seizure treatment drug. The drug had annual sales of over $260 million in the US. UCO Bank, Bank of Maharashtra and Central Bank of India confirm that they will receive fund infusions from the Government of India. And in key brokerage calls, HDFC Securities initiates a buy on Reliance Nippon with a target of 227 rupees, indicating a potential upside of 43%, while MK upgrades JK Cement to a buy from accumulate rating and hikes the target price to 864 rupees. Well, those are a few stocks that you need to monitor in the session today. I've already asked the questions about PSU banks, so won't dwell too much on it, but just keep in mind the banks which have received the corpus or have confirmed that they're going to receive the corpus are starting off well and truly in the green. All 3 of them, without any exception, have a tick of green. UCO 5%, the other 2 about 2.5% apiece, but nevertheless, they're starting off with a positive note at their hand. Deepak Jasani, we'll talk about the AMCs in a bit. Is there a banking name, very quickly, that you are bullish on?
Now, within banks, we have been maintaining that PSU banks, till there is a drastic change in the governance norms, compensation structure, and consolidation, one should not be looking at it from an investment perspective. Same thing that I mentioned about telecom, you can do even in PSU banks, basically do a trade of 8 to 12 or 15% here. Here, the percentage gains are typically more than the telecom companies. Private banks, again, they haven't fallen much. on the hope and expectations that the economy will pick up pace going forward. Their credit cost will remain under control, NIMs will remain stable, and such like. Now, so in the private sector banks, I don't think one can recommend aggressive lump sum investing. So if you are keen to invest in bank, then probably you can do a staggered investment in private banks over the next 6 months. Till that time, I think markets will undergo volatility and you will get an advantage of a lower average cost.
Okay. Hari, about 2 minutes. So a short answer first, then we'll get into the detailed one. If you were to park fresh money into one stock today, which one would that be?
I think it would be a consumer goods stock, probably a Hindustan Lever or a Britannia. That is what I would put my money for the next 1 year.
Reason being?
Again, the impact of GST, pickup in top line, I think reduction in input costs, a lot of things are working on favor of all this.
But you're wanting to buy an expensive name. There are cheaper names available. I mean, in other sectors too. But you're sticking to an expensive consumer name.
I still think the macro story is a lot stronger on consumers than on any other sector.
Okay. So go out and buy an HUL or a Britannia.
Britannia, that's a good.
Okay. So that's the view from T.S. Harihar about pockets that he would put money in. Stay on, Hari. Some more to talk about. Deepak, Jasani, stay on as well. We want to talk at length about the note, about some stocks that you recommended as well. But it's less than a minute for the markets to kickstart trades. So I want to take it to our technical experts and try and figure out what is their top trading idea for the day today. Amit, Harchekar, I'll come to you first. Your top call for the morning.
Well, it would be buying Reliance Industries for a target of 1200. Stop loss would be at 1110. The reason why Nifty Energy Index yesterday has given a breakout from a triple bottom and we are expecting a 10% zoom in coming days.
Okay, so Reliance Industries on the back of the Nifty Energy Index also moving up and Reliance leading the charge there. Brijesh, very quickly, your top call for the day.
GSFC, Gujarat State Fertilizer, would be on the buying list. Trendline breakout with the volume has been increased, which indicates the buying side. Keep a stop loss of 11-12 and play for the target of 122 to 123 zone.
Okay, so GSFC and Reliance Industries, both names in similar businesses, but up in the green. Rather, the top calls for the day today. Let's wait and watch what happens to them during the course of the session. But here's how we are starting off. Not a bad start to the new year. Let's see if this lasts. By the way, the volumes should be thin today, so don't make too much of the movements. But 0.25% higher for each of the key indices, or maybe 0.2% higher for each of the key indices. The mid caps and the small caps, I doubt the small caps are doing too much, but yeah, the mid caps too lying flattish. So not a bad start. You'd probably be happy with almost anything that comes up on the screen at the start. Let's see how the day progresses. This is the heat map. I would have thought even Stevens, it actually is, because a lot of stocks are higher by less than 0.25 or 0.3%. Any big losers? No. Hero MotoCorp maybe marginally off. Power Grid marginally off. A select set of, no, not even IT, just Tech Mahindra from the IT space looking slightly weakish. Otherwise, not all the IT names are weak. What's gaining? Bharti Airtel and Bharti Infratel, both of them are up today. Z, another day of gain. Bajaj Auto looks like starting off okay. UPL maybe marginally okay. L&T and JSW Steel marginally okay. But yeah, it's just all over the place. The top gainer and the top loser, neither of them have moved more than 1.5%, and that tells you the story of what's happening on the index today. But well, maybe the index is quiet, the volumes may be quiet, but the breadth seems reasonably okay, even at the broader end of the spectrum. And there are specific pockets of strength and weakness that we should highlight. So let's bring out the stocks in news, the top movers the last couple of days, and so on and so forth, and let's see what's happening here. UCO Bank, remember we spoke about this in the morning as well, that United Bank, when it got this infusion, even though it was anticipated, the stock moved 9%. We are having this movement, similar movement in UCO Bank, 13.5%. Central Bank about 1.5%. Bank of Maharashtra 3.5%. Frankly, UCO and Bank of Maharashtra got the larger capital infusion as well. So both the stocks reacting. UCO in particular, very, very active. What about aviation companies? ATF price cuts and sharp cuts there. Well, interestingly, SpiceJet has had the biggest reaction. Interglobe quite not there. Jet Airways 281 now. It's no longer at the 255 kind of level. So, well, strong move really for Jet Airways. The future had cracked to 233 around mid-December. From there to 281, it's rallied quite a bit. But SpiceJet is the hero on open. Let's wait and watch if it lasts. JMC Projects, they got a very large order win. Let's see if that stock is reacting. Well, 2.5%, 596 crores for that one. 2 orders really, but cumulatively about 596 crores in the state of Orissa. And this stock too starts off about a couple of percentage points higher. But the markets and the indices absolutely flat. Brijesh, any trades on the index or on a specific stock that pops up on your screen? You may well want to reiterate GSFC.
See, Bharti right now is looking good, somewhere around 370. The stock has been quoting. If anyhow, if it trades above 318, one can take a buy call with the stop loss of 312 and play for the target of 325, 326 zone.
Okay. Amit, what about you? Any trades that pop up on your screen, index, specific stocks, or equal again, as I said, a reiteration of Reliance?
See, one interesting thing what we have observed is globally the dollar index has moved below 96 levels, and if you look into similar move for USDNR, there is a breakdown which is taking place below 69.6 in USDNR. So there is a possibility that rupee could appreciate by 2.5% and dollar index could move lower. Benefit of that could move to commodity stocks, and within that we think Tata Steel is one stock where good accumulation has happened between 515 to 520. So that should be bought with a stop of 510. We are expecting this stock to retest the recent resistance of 545.
Okay. Brijesh and Amit, we'll let you go on that note, gentlemen. Thanks so much for taking the time out on the first day of the new year and wish you a splendid 2019. Well, aviation companies certainly in focus, banks certainly in focus. UCO Bank is the top draw, and some of the PSU names are doing rather well for themselves. TS Harihar had a point about how maybe the market is preempting some dividends from some of these PSU names, but certainly they seem to be in the limelight in today's session as well. MTNL is up about 4%. There are a couple of others which are moving up. Dredging Corp about 1.5%. And mind you, these are stocks that have already had some moves in the last few days. You know, a recommendation that came in from HDFC Securities, we highlighted that in the brokerage notes today, were the AMC names. Now, Deepak Jasani is with us. Deepak, why the AMC names, and are these stocks that investors can buy in who have a slightly shorter term view as well? By short term, I mean less than a year, because typically whoever I hear speak about these AMC names, HDFC, AMC or RNAM, speak about buying them with a 2-3 year perspective. What's your rationale here?
Yeah, so let me first clarify that the note on AMC companies is out from the institutional research side. Now, what they feel in these stocks is that the financialization of savings will lead to more flows into the AMCs, number one. Number two, the equity asset as a proportion of total AUM is large in the case of RNAM. Number three, the SEBI regulations, the recent SEBI regulations of banning front loading of commission, banning incentive tours and such like, and reducing the total expense ratios. Now, the third one will not have a negative impact on these companies because most of it will be passed on to the distributors. So all these three regulations will lead to their cost structures shrinking. So although their top line may not increase smartly over the next 1 or 2 years, but their bottom line will increase more than that. So based on these few triggers, they feel that the stock is worth the look and worth investing. Now, as far as the investment horizon is concerned, I think the first 6 months of this calendar year are going to be volatile. So if you are expecting a return in the first 6 months, then probably you should wait or do a staggered purchase. Returns can be expected only in the second half of this calendar or maybe later. So that is what the investor has to be clear about at this point of time.
Okay. Well, it's the first day of the new year, second day of the week. HDFC Securities, your team, Deepak, comes out with this pick of the week as well. What's been the pick of the week this time?
Pick of the week this time around.
Idea, Deepak Jasani, if not the pick of the week officially, an idea that you believe investors can park fresh money in.
Yeah, we have come out with a compilation of New Year picks, basically 10 stocks. I think we spoke about that on the 27th when I came on your show. Now that includes a basket of stocks like ACC, Axis Bank, Coromandel, FDC, ITC, KEC, Muthoot Finance, Reliance, Subros, and Ultratech Cement. So all these stocks we thought are good to accumulate or in a staggered manner over the first few months for a return of 12 to 15% over the full year. So these were the picks which we came out, I think, about 8 or 10 days back.
Okay, if I can dwell on one idea out of them, and that's Subros. The reason I bring it up is sometime in January, we spoke to Subros last year, January, when they spoke about getting into the non-passenger vehicle space as well. The problem though is that Maruti volumes are coming off, Deepak Jasani. Will Subros still be able to show the revenue growth that it is known for on the back of Maruti volumes moving up? What are the earnings estimates that you have?
Now, Subros again caters to the car and air conditioning segment in the auto ancillary space. Now, has almost a monopoly kind of a situation in this industry, has a very large market share. Now, as you mentioned, the passenger car sales are sort of topping out for the time being. So there is some headwind going over there, but I think there are some other opportunities in the sense in the commercial vehicles, it is the government is thinking of making it compulsory, and that may be rolled out very soon. Railways is another sector where they are starting to supply. So the other sectors, apart from the passenger vehicles, which is seeing a temporary blip in demand, could continue to do well. So that is, I think, the rationale why Subros can be looked at despite a short-term fall in the sales momentum in PVs.
Interesting. So do watch out for Subros. So they still believe, at least Deepak Jasani and team still believe the stock could do well. Moving, changing tracks from a small cap or a mid cap to a large cap name. Hari, before we thank you, Kotak Bank will remain a stock in focus. Now, I know yesterday everybody was, the conversation was about the deadline, etc. But there's a court case pending. Until then, I find it difficult to believe that there'll be a decision taken on either side. But what's your best estimate of what could happen to the stock? Either way the decision comes out and the way the business is growing for them.
See, I think in my way there are two options or two possibilities as I look at it. One is, what Uday Kotak has been asking about the PNCPS, which is that, non-convertible preference shares as a proxy to dilution. See, that seems to be right in letter, although it may not be right in spirit. So I think the court of law should typically go by letter and not by spirit. So from that perspective, I think what they're claiming is right. One can argue that that doesn't really amount to dilution, but if you look at the 2000 agreement between Kotak Bank and RBI, PNCPS is perfectly valid. So from that perspective, in my view, the court should probably take that line. Let's say the other option is they're forced to dilute, then it matters about whom they dilute to. For example, if they get a large investor like a Warren Buffett, the liquidity will matter. The only concern for Kotak is liquidity shouldn't be floating around in the market because that will lead to a fall in the price. So either way, I don't think there should be a great price damage, but the price may not really move up unless there's a clarity on the ownership front.
Okay, so until the clarity emerges, Hari doesn't believe that Kotak Bank could have a substantial price movement. Keep that at the back of your mind. Hari, so good having you. Thank you so much and have a great 2019.
Thank you, and same to you.
Okay. Deepak Jasani, the other set of names that everybody's been talking about, or at least everybody looks at them from a valuation perspective, are the small finance banks. Now, due to certain regulations or regulatory measures passed, Equitas, Ujjivan, etc., all came off. They've had a bit of a bounce as well. You can't fault them for the valuations that they're trading at, but the business growth, the jury's split. Where are you on this if you guys cover Equitas, Ujjivan, or any of the others?
We have coverage on these stocks and feel that they have some upside left. But we are not as bullish as the private sector banks on the small finance banks because inherently their model requires their fee income portion to grow fast. Their NIMs in the core business are doing well, But on that basis, you can compare them with a microfinance company or a regular NBFC. Now, those kind of companies are getting much lower valuation than the private banks. So in that sense, we like them, but we don't see a very great upside from here as compared to the private banks.
Okay, don't see a great upside. There could be some upsides though from the current levels is what Deepak Jasani is suggesting. The news at hand, Deepak, and that's the 14.4% cut in ETF prices pan-India. Now, where do you think we stand on this aviation super cycle run rate? Because everybody until 3 months ago or 4 months ago used to speak about how the monthly sales numbers are so strong, and therefore despite the crude anomalies, the sector remains a buy, at least in India. Those numbers have started to come off a bit. We already seen crude having its bearing, but ETF prices now have been cut quite meaningfully. Does it provide an investment opportunity? SpiceJet, Interglobe, maybe even a jet?
So now aviation stocks can be compared with telecom stocks, which we discussed some time back. So basically high capex requirement, high competition, requirement of high load factor and such like, with crude price or the ATF prices impacting their operating profits meaningfully. So in that sense, so aviation companies on a macro basis, there is a lot of potential. The population of India, which is going to travel by air going forward, is going to grow only. It cannot degrow from here. There are issues about airports, the capacity at the airports and such like. But otherwise, being so high capex intensive businesses, I think you will have to ride the short-term cycles in these sectors rather than be a long-term investor.
Okay. Deepak, I'll wrap up this conversation with one question. We are coming up with an auto analyst because the auto sales numbers will start trickling in anytime soon. I know you gave those 7-8 ideas, but within that auto space, and there's two-wheelers, there's tractors, four-wheelers, commercial vehicles, auto components, and Subros is probably a part of that. But what is that one favorite idea that you have?
Among auto ancillary, we like Auto Excels the most. We have had a coverage on that stock for a couple of times. Our targets were met, and we still continue to like, and we'll keep recommending them on some falls from here. Within auto space, I think two-wheelers are slightly safer as compared to the other segments.
Okay, so automotive axles, Deepak, leave us with the rationale as to why is it that you like automotive axles. I mean, you recommended Subros from that, again, auto ancillary space as one of the ideas, but you seem to be liking automotive axles more. Why so?
The Auto Axle basically has part foreign ownership. Meritor is a part owner. It is the largest player in axles, and now it is going into suspension assemblies. So it has so far not been supplying to Tata Motors in a big way. Now they are sort of pitching for orders from Tata Motors, which we believe they are close to getting. So in case Tata Motors also becomes their client, then probably their sales growth will be even faster from here. And even when EV comes into play, the demand for Excel is not going to be impacted much. You will have to sort of make some changes on the Excel design because of the weight of the battery at a particular point in the vehicle. But otherwise, Excels will continue to be made and sold going forward also. Their profitability has grown, their sales are growing at a very healthy pace. So that broadly sums up the rationale.
Okay, we'll leave it at that. Deepak Jasani, thank you so much for joining in today and wish you and your team a great 2019.
Same, thank you.
Well, that's the view from HDFC Securities. Tell you what, by the way, the markets have slipped into the red, marginally at that. As I said, don't look at too much, don't make too much of the green that we started off with. Don't make too much of the red that we have right now. Volumes would be very tepid. If you can actually just bring up what the volumes are right now. It's just the start of the trading day, but the volumes would be thin. And I would reckon that the volumes would stay thin throughout the day today. Actually, the NSE cash volumes are not bad, I must say. Just that, it's just the first 15 minutes. Anyways, let's see how the rest of the day shapes up as well. We take a break, but since we're on the topic of autos and it's the hot theme today, on the other side, we discuss the risks that are threatening to push automakers off the track with Ankit Merchant of SMC Institutional Equities, and take a closer look at the asset quality picture of one of the best performing banks of 2018, City Union Bank. The Managing Director N. Kamakodi joins us later on.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Back with Indian Open right here on Bloomberg Quint. It's the first day of the new year, which also means that December monthly sale numbers will be released today. It's not looking too exciting though, with brokerage houses and our dealer surveys suggesting that sales may stagnate or actually fall for some of the companies. Ankit Merchant from SMC Institutional Equities joins us right now with his take on what to expect from the month of December. Ankit, good having you. Thanks so much for joining in. Happy New Year to you and your team. But promises to not be a happy start to the new year for the auto ancillary names or the auto companies. What are you watching out for the most?
Yeah, good morning and Happy New Year to your team and your viewers.
Thank you.
Not a good start for the automobile companies. December, as we know, has been pretty much muted and is likely to be muted. However, what we are looking forward is companies with strong dealership network and higher brand recall is where I believe the inventory will start coming off. So that will be the two major factors which we are looking forward. Specifically coming down to companies, we expect Maruti Suzuki to report a growth of 5.4% or near about 6%. And out of that, domestic growth is likely to be near about 7%. And the export growth is where we see a little bit of pain coming in. And what we expect is the export growth to come down to 20%. So that would be a degrowth of 20%. So we expect Maruti Suzuki to report a slightly flattish number for this particular month. Coming to two-wheelers, where we expect Bajaj Auto to report strong numbers. They are likely to be the leaders in this particular month, and they are likely to have a growth of 13.4%, and which will be followed by TVS, which is likely to report a growth of 7 to 8%, followed by Hero MotoCorp, which the growth is likely to be near about 4.5 to 5%. However, the major concern is likely to be in the CV space, where we expect Ashok Leyland to report a degrowth of near about 20%, and we expect numbers to come down drastically for the MHCV segment, and all we also know is that the Ashok Leyland had a strong base in the last year, so the numbers are likely to be much more painful than what is likely to be expected.
Interesting.
So this is our broad mix of our expectations from the automobiles, and yeah.
Okay, Ankit, so 2 or 3 follow-up questions. Firstly, on Bajaj Auto, now I heard you mention that you expect a 13% growth. I think the averages of all the brokerages that come out with these estimates seems to suggest that the number could be as high as 23% as well. So am I to assume that if the number is closer to that 23%, which is maybe 18, 19, 20% or even 23%, it's a stock that, or it's a number that will make you go out and buy a Bajaj Auto? Because I believe your estimates are about 13%.
Yeah. So there are 2 factors which I'm keenly looking forward. One is the domestic growth. So in the domestic growth, specifically for the motorcycles, we expect a good amount of growth coming in year-over-year. As we know, the change in strategy which has happened, where the company is going forward for the entry-level segment, and it's been really pushing hard to push their sales. So that is likely to to bring the growth. But what we see is the domestic three-wheeler passenger rickshaws, auto rickshaws, where the growth is likely to come down. So hence the mix will grow, but definitely it is likely to come down. Another factor for me to look at Bajaj Auto is that how their exporters is ramping up. Okay, so what we have seen in the past is whenever the crude prices have come down, specifically Bajaj Auto is supplier to most of the crude exporting nations, so be it Nigeria, Egypt, or the other African countries, where the growth comes down significantly. So this is a major risk which I see with Bajaj Auto going forward. Hence, we are not very much positive on Bajaj Auto, and we had a target of 2,800, which we released in the last quarter, and we have achieved the target. So we'll be waiting for further uptick in the exports. Only then we'll look forward to look at Bajaj Auto again.
Okay, so am I guessing that? I'm guessing you are saying that it's not a buy right now. Subject to certain factors, you'll go out and buy it. The valuation is still not compelling enough for you to go out and buy a Bajaj Auto today.
See, on the valuation front, still it is. I don't say that it is a sell. Looking at it is not trading at a very premium valuation what it used to trade a year back. But there are certain factors. One, as I told you, the exports slowing up. Okay, which I see, which will be slowing up in another coming months. So I expect Bajaj Auto to remain range bound from this particular levels. Probably, one could start accumulating the stock again back at 2,600 or so, and the the maximum upside which I see in the stock could be near about 3,100. But definitely not a buy recommendation on Bajaj Auto for me at this particular juncture.
Okay, not a buy at this juncture on a Bajaj Auto. Ankit, our estimates suggest that one of the weakest numbers that will come in would be from Ashok Leyland. I mean, even Tata Motors, yes, but Ashok Leyland in particular, the consensus average seems to be about a 14% downtick. What are your estimates? What are the factors? And at this 100 rupee price tick, is Ashok Leyland pricing in the negatives? Or if the numbers continue to be weak, then there could be some more downsides to the stock?
Yeah. So specifically to Ashok Leyland, we expect the growth to come down to near about 16 to 17%. That is likely to degrowth of 16 to 17%. And as I told you, the major amount of degrowth will be through the MHCV, where it is likely to decline more than 20% for this particular month. Okay, coming to the valuation part, and at this particular price, has the stock factored in? Yes, I certainly believe the most of this negative has been clearly factored into the stock. Hence, we have seen, the most of the auto companies in the last 1.5 or 2 months, most of the auto companies have rallied from their lows. But Ashok Leyland has been stuck over there, which has been factoring these particular issues, which the industry has been facing. The primarily, as we understand, is the slowdown, and because of the liquidity crisis, which has impacted the CV sales. So yes, at this particular price, if one looks at it, yes, the most of the negatives have been priced in. Yes, there could be certain factors which can pull the price down. But if you ask me at this particular level, I would definitely be a buy on Ashok Leyland. In fact, we are still buying Ashok Leyland with a target of 134. And what we expect is this particular slowdown is likely to continue for a month or probably 2 months. But in the month of March, what we have seen, usually for most of the CV players, the numbers pick up very drastically. Okay, so what we expect in the month of March to the demand which has been postponed to come in, and as we know, the BS6 norms is just around the corner. So a lot of pre-buying is likely to come in the next particular FY19 in the year. So we expect a lot of growth, which will start factoring, and the companies will start moving up. So hence, Ashok Leyland could be a very good buy for a particular investor who can hold for at least for 6 months and can keep a target of 134. A minimum of 134 is what we expect. Yes, the concern on the MD, who is leaving in the month of March, is likely to hang on the stock. But again, at this particular price, it seems very sweet for me to enter the stock.
Okay. Interesting. What's your top idea from the auto space now, looking at the numbers that will come out and the valuations that the stocks would be trading at?
So top ideas, as I just said, is Ashok Leyland. In fact, that is the best buy, I think, in the market right now in the auto space.
So let me rephrase my question then, Ankit. Let me talk about a pocket that a lot of people are bullish on, and I want your views here, which is the tractor space. Do you believe Escorts and M&M provide decent value, looking at the numbers and the valuations again?
So coming to Escorts, I believe, a lot of growth will start coming in as we understand now that the Prime Minister is likely to focus more on the rural and the farmer segment. So where we expect, the lot of, as we understand, is farm loan waiver which has been going on, and many other soaps will be offered to the farmers. So hence that will likely to drive the tractor segment both for Escorts and M&M. M&M specifically, I like it because again, the Escorts is one of the tractors is one of the factor. Second is their product pipeline. We have seen that with Java, which has been a runaway success from the start, and there is good amount of portfolio coming up. They are launching 2 new vehicles again in this particular month. So we expect Mahindra and Mahindra to be among the best focused stock. At this particular price, again, one can enter the stock. However, one can look at adding this particular stock whenever it comes down. But what we have seen, it has rallied a bit from its lows, and one can keep adding this particular stock on all the weakness.
Okay, Ankit, thanks so much for joining me today and giving us a lowdown of what to anticipate from the auto sales numbers. They'll start trickling in anytime soon, so we'll let you leave and wish you a Happy New Year.
Happy New Year to you.
Thank you so much. That's the view from SMC Equities. Take a break on that note, on the note that the markets are lying low. But on the other side, a conversation with City Union Bank's Managing Director, Mr. N. Kamakodi, coming up.